right, everybody. How are you? If everybody can hear me, please type yes on the chat. Let's. How are you? Yeah, I just confirmed. I just confirmed, and I am live right now with you guys. Just give me a second. Let me just invite everybody else to the show. Everybody on the Daily Edge newsletter gets an invite, of course, to the show. All right, so big news today coming out of the UK, right? Let's go to the news terminal. But why don't we give people a little bit of time to join us? So I'm going to talk about some other markets. I'm going to talk about crude oil for a while, and there was news today that a gas leak was triggered on a refinery, and several workers have died and others have injured in a blast caused by a gas leak at Saudi Aramco's. So that should have send the price in natural gas higher. But you know what? Let's start by looking at some news on Brexit. There was a lot going on. Today we had employment numbers out of the UK, which had little to no influence on the pound's price against all majors. Because of the news coming out of the EU and the EU and the UK, that a Brexit deal was very possible. Now, what I'm going to do, I'm going to show you the news. Our premium community, because I could go through all of my news terminal, but I have curated here the most important news from Brexit, right? Michel Barnier is the chief negotiator from the EU. It's the EU's chief negotiator with the UK, and he said that a Brexit deal is possible at this week's summit, but the UK and EU would have to reach an agreement by tonight at the latest. So the thing is that the deadline is tonight at midnight, right? Tonight at midnight for a Brexit deal to be reached. And later, EU's Barnier said that he saw three scenarios ahead: deal tonight, extension, or total breakdown, which is, absolutely normal. Those are the three only possible scenarios. And then he said, and this is very important, that three issues remain in talks with the UK: customs, the Northern Irish consent mechanism, and level playing field. All right? And right here, the EU will call another summit if UK misses midnight deadline for a deal. So, having said that, why don't we go ahead and see what's going on our charts. And let's start by, why don't we start by looking at the euro versus the US dollar, right? Because this is a free trade free trade idea. There's no free trades in life. This is a free trade idea that I posted for you guys, or that I sent to you guys via email, right? So, the euro versus the US dollar is slipping down as predicted, and we expect at least to reach the 108.90 level. All right. So the move from the highs and from the rejection of this key zone was spot on, and we enter at the break of the thinner or the inner bullish structure, this immediate bullish structure, and we expect a breakdown to test the lows at least around the 109, if not our ultimate targets around the 108.60. So a little bit of an update on this trade. a little bit of an update on this trade. Everything is going as planned, and we are going to keep our shorts, and we are not moving our risk just yet. All right, so let's move forward and let's have a look at the pound, shall we? So yesterday I sent this possible scenario to our premium members in our premium community, and well, the scenario was basically a break of the berry structure. Now let me show you the berry structure that I'm talking about. This berry structure right here. This berry structure right here. So what I was seeing is a break above that berry structure, and not only that berry structure, but this key level right here. This key level and historic level around the 125.70. So the possible scenario that I pointed out yesterday to our premium members was a break above, which had already happened, a retest of this broken structure and broken levels for a continuation. Now, I did not send, well, I did send this possible scenario at the end of the day, and as you can see, it's actually working out perfectly. Now, with the news coming out of the UK that a Brexit deal is very possible by tonight, this long scenario can be a runner. And I'm going to go to the daily chart because I want to show you where we can see the pound going if in fact a deal is struck between the EU and the UK by midnight tonight. Now this is the deadline, all right, that we have for a Brexit deal, midnight tonight. And if we do get a deal, I see a rally to at least actually, I'm going to point it out as a key level because it is a key level, and actually, I'm going to use this one, at least to the 130. So I'm going to go ahead and move the coordinates correctly to the 130, and I'm going to use my key level color. So basically, this is a key level because you can see that right here is where buyers were stepping in, protecting that level after we broke above it, all right? And here is where we gave up, buyers gave up, and sellers took control of the market. Now, if a Brexit deal is struck, I do see a rally towards this level at least. So basically, this scenario that I pointed out yesterday, if you took that trade, and a deal is struck by midnight between the EU and the UK, that would only leave a ratification or a vote from the UK's Parliament for us to get a soft Brexit by October 31st. That would catapult the pound towards that level, and if you took this trade, definitely it can be a big winner and a runner. So big eyes to the 130 level right here. Big eyes. I see the pound going to that level if everything plays out as it is playing out right now. And well, that's about those are the levels of the pound to see the 130. Actually, I'm going to share with you a little more on the pound versus the US dollar because well, it's going to be very difficult to trade a big move, or yeah, it's going to be difficult to trade a big move on a news that a Brexit deal has been struck. Why? Because the market is going to be very volatile, and there's not going to be an actual setup, so your risk to reward is going to be horrible. But what could happen is that we get a rally towards the 130 and a retest of this green level right here. And this level right here is where I will be looking to buy the pound for a continuation higher. So eyes on the 127.70 level for a break above the level, a retest of the level for a true setup or a true bullish setup for a continuation higher towards the 130. Now, if you are not a premium member, I'm going to be sending the trades on real time as signals to our signal community, and I'm leaving you a link below this video so you can try us out for a month for only $25. Now let's move forward and let's have a look at let's have a look at the British pound against the Japanese yen. Now, disclaimer, I am still long the British pound against the Japanese yen from these lows. Yeah, personally, I'm still long. Very small. I've already taken profits here here, I think, or here, I don't remember correctly, but I have still 1/4 of the of my position, and my stops are below this low. All right, now this is for full transparency and disclaimer, but again, the same scenario. We had employment numbers coming out of the UK that had little to no impact due to the big news that a Brexit deal might be struck by midnight tonight. Let's have a look at the possible levels that we could see this currency pair fly to. Remember that this is the GBP, the pound versus the yen. The pound versus the yen is a very, well, it's one of my favorite currency pairs to trade, and whenever I'm trading the pound, I'm always looking to trade it on the pound versus the yen. And the reason is that on these currency pairs you get these big moves. For example, this move right here was almost a 2,000 pip move to the downside. Of course, that because this is a more volatile currency pair or more volatile market, the stop losses are going to be wider. But it doesn't matter because the risk versus the reward scenarios are best on this currency pair than on any other that I have found. All right, now let's have a look at what can happen if we get a deal by tonight. I see this currency pair definitely breaking the 137.50 to 138 level, and this green level is where I will be looking to add to a long position should we get a deal from the EU and the UK. So possible break above, looking here for a setup for a continuation higher towards the 141. All right, the 141 is our key level right here, where we got big buyers jumping in right before we broke below. And if you look closely here, this is very key too. This week on this candle shows me a retest and a true rejection to the downside. Once we broke below, we retested it, we truly rejected, and we moved down for about 1,500 pips. So key level, the 141. Let me just correctly put my coordinates. I have it on the 141.20. It is the 141 key level, and if we get a deal struck by tonight, I do see the pound moving, I guess the yen moving towards that level, and the 137.50 is where I will be looking to buy. All right, now this is a daily chart, of course, just look at what happened last week when we got the news that a Brexit deal was possible. We had a 2.30% move in one day for 306 pips, and a 2.16 move the next day for 290 pips. And right now we are 380 pips away from the 141 level. So yeah, it's very possible that if we get a deal, we're going to be touching that level. So be careful of the volatility, and of course be careful not to get burned on a pullback, meaning that if you get a deal, wait for the real retest, and please, because this is very news driven, be careful and adjust your risk accordingly. I am going to be sending all of these to our premium members, and if you're not a premium member, well, and if you want to try us out, I'm leaving you a link below so you can try the premium community and the signals community for just $25. Now let's move on and let's have a look at the US dollar now that we have gone through the pound, news on the pound, what has happened with Brexit, etc. Let's have a look at the US dollar. Now, on this week's weekly market breakdown, we were looking at this at this bullish structure breakout. Now, we had a few fake outs out of this bullish structure, like here, and of course like here, but this is the US dollar currency index, and I'm going to show you something. If you look closely, these candles, these very big red candles, one here, another one here, another one here, and this one right here. All of those candles are Friday candles. I mean, all of those candles are the last candles of a Friday. That's just the way the US dollar currency index closes every single week. But again, let's use this low for our bullish structure, and let's see what has happened. And again, if you can see right here, we actually are holding this bullish structure. Now, this is very interesting, okay? Now, because this shows you two things. This shows you that trend lines and structures need to be correctly drawn so you don't mistake a test for a fake out or a breakout, and that structures are important and they leave you keys. So on Monday we had this drop, or it was on Sunday. We had this drop on, no, this was on Friday last week. We had this drop on the US dollar, retesting the lows. We opened higher for the weekend, and now we are moving up. So my view on the US dollar continues to be very bullish, not only because we are technically speaking on a bullish structure, but because of growing job numbers, the unemployment rate coming down, and of course the gap that exists between the unemployment rate and the average hourly earnings, which is very important in my analysis. So if the gap keeps widening, meaning that the unemployment rate is going down, which means that more jobs are created and there's less unemployed people, and at the same time the average hourly earnings are rising, this to me signals a healthy economy, which makes me be a bullish or a US dollar bull. Now, everything that I just said, I explained on last week's non-farm payrolls, or last month's non-farm payrolls, or this month's non-farm payrolls. So basically, right now, after this retest of the 98.20, and obviously these lows, I see the US dollar, technically speaking, going higher towards my target at the 161.8, around the 99.60 to 99.80. So having said that, I'm going to leave this right here. Having said that, our short position on gold, which is still very much open, is looking very good, right? Now, this is if you don't know, if you're new to the show, you should know that we trade currencies and gold. Actually, we are very active in gold trading. And right here, if you're new to the show, this is where we went short with this risk versus this possible reward. So our trade is still open. We do have our stops at break even, but because we are very much bullish in the US dollar, we see this big move on gold topping up, and we see a break below key levels for an immediate bear market, which is why what we are preparing for with this short position right here for a first target at the previous low and then to our key level. Now we are still our bias is still bearish in gold. Nice comment, thank you. Our bias is still very much bearish in gold, and we continue to have this position open. So what levels to look for? Bounces in gold. Again, we have the historic level around the 1485, right here around 1485. This is where we found buyers last time. Yeah, I can read that, Zina Kitty. How are you? What, you didn't know that we had a chat? Or that was public chat? So basically, right now, gold is rejecting this previous base, and we are finding sellers. All right. So basically, I'm going to show you. This is very much to me, a continuation pattern for a retest of this key level and a break below. So this is very technical. What I just said. I am not obviously telling you to go short gold right here. This is not investment advice. This is just what is going on right now. And what I would be looking is a break below our historic key level around the 1485 for a possible short with a good risk to reward ratio to our first targets again. But because we are still short from this breakout, it's very possible that we will not be adding here if, of course, this scenario plays out. But if you are not short gold, you should be looking at the 1485 level for a break below, a retest, and a possible short opportunity to the previous lows. And the reason this is an important level, historically, it is a previous high, but as you can see here, this is where buyers jumped in again and again, tirelessly trying to protect that level. But because of what I told you before, that this move looks very toppy and that we have broken below that level twice, and our bullish bias on the US dollar, we do continue with our short or a bearish bias on gold. So let's move on. Hi Zina Kitty, we already commented on the pound versus the US dollar. When we're done with when we're done with the session or this live this live session, you can go ahead and click the same link to watch the recording and go through the first few charts that we went through. We went through the British pound against the US dollar and the British pound against the Japanese yen. Now let's have a look at the US dollar versus the Japanese yen, because this currency pair, it's currently at a very key level. All right. Now we took with the premium community a very nice long from these lows, which we closed around here for a nice 106 pip win with a good risk to reward. And yeah, I mean that we closed this trade on Friday last week, I think, or Thursday. And if you want to get these trades as signals, just join us on the premium community. I'm leaving you a link below this video to try us out for $25 for one entire month. But if you look closely here at the US dollar versus the Japanese yen, this is where sellers were found again and again, and not only for sellers were found, but but after the US dollar versus the Japanese yen tested this level, big moves to the downside were experienced. Now, and this is what I mean by big move to the downside. The move from this low to this high was very slow in comparison to the move to this high to this low. The moves to the downside are very much more aggressive than the moves to the upside when this level comes into play. So this is why we were targeting this level with our long from these lows. And right now, I can see that there's a lot of rejection here, and but because we have a bullish bias on the I love you too, dude. Because we have a bullish bias on the US dollar, we are not going to be taking this short position. Now, personally, I took a short position here because I do still have open half of my long position here, and I'm hedging my position. This means that if the US dollar versus the Japanese yen breaks above this level and continues to rally, it's going to stop me out on a loss on my short position, but I'm going to be making money on my long position. And if the US dollar versus the Japanese yen rejects this level and dips below these lows, I'm going to be taking out at a win on my long position because my stop losses are below these lows, and I'm going to continue with my short position. So I'm hedging here to continue to be in play on the US dollar Japanese yen. Okay, but for the time being, we remain flat, meaning that we are not taking a short or a sold short position on the US dollar versus the Japanese yen. But this is a level you need to be watching, because if we break above this level, this is where you could look for a good risk versus reward long setup, all right, on a breakup. Because if we do break above, momentum is going to dry up, and we are going to be retesting. And if buyers come in at this level, you are going to be able to jump in with a good risk versus reward. And this is all you need to be looking for, good risk versus reward scenarios when it comes to trading and making trading decisions. All right. Now, that was the US dollar versus the Japanese yen. We have gone through every market, I do think. The US dollar versus the Swiss franc remains unchanged from the weekly market breakdown, still trading inside of this flag, and I'm waiting for that breakout of the flag for a short position on the US dollar versus the Swiss franc. And again, we are biased, long biased in the US dollar, but the level that is at play here on the US dollar versus the Swiss franc is a very important level. It's parity, and this is a key level where big moves to the downside have been experienced before. So yeah, I'm waiting patiently for a good short breakout setup on this currency pair for a test of the lows at around the 96.80. If it happens, if we do have a breakdown, or even the 95.50. But for the time being, remain flat on the US dollar versus the Swiss franc. And if there's nothing else that you guys need me to look, I think that we are done for today. Or maybe if you want me to look at something else, I do. I haven't worked my charts on crude oil or the British pound against the euro. But if you don't have anything that you want me to look at, I'm going to be closing up these sessions. But let's have a look to this breaking news right now. IMF says cuts in 2019 U.S. growth from forecast to 2.4% from 2.6% in July. Cuts 2020 US growth forecast to 2.1% from 2.3%. Wow, this is very bearish for the US dollar. IMF says it cuts the 2019 US growth forecast to 2.4% from 2.6% in July, and cuts the 2020 US growth forecast from 2.1 from 2.1 from 2.3%. We have had some numbers out of Canada. Canada existing home sales month over month for September was 0.6 versus 1.4% previously, and an estimate of 2.0%. Let's have a look at the reaction on the US dollar Canadian dollar. The US dollar Canadian dollar unchanged, and the US dollar remains unchanged from these IMF cuts on growth forecasts. Heads up to that, guys. We might see some reaction some reaction to this news by the U.S. Open. So heads up, and a little update on the pound versus the U.S. dollar. We see more bullishness coming in. So if you just join us, please after I close this live session, go to the same link that you are on to watch the first 10 minutes of this session on the recording on our YouTube channel for all my analysis on the pound and all the news that have come out of the UK and the US. All right. If you're not a premium member, again, I invite you to join us. I'm leaving you a link below this video so you can test our premium services for just $25 for an entire month. And then you can cancel at any time, or I'm pretty sure that you are going to be wanting to stick with us. So until tomorrow, guys, this is Orlando for Tradimo, and again, thank you for joining me. Goodbye.